Let's move on now to what seems to be a completely brewing and simmering corporate feud. And this is one that involves certain allegations of corporate governance lapses as well. The Burmans, the promoters of FMCG major Dabur India and Religare, the Religare management that is, have been engaged in a tussle ahead of the regulatory approvals for the open offer that the Burmans are to extend to Religare shareholders. The Burman family has accused Religare's existing management of lapses in corporate governance, while Religare's independent promoters have levelled allegations against the Burmans. Investor advisory firm InGovern Research Services has written a note on this, a report on this. And we have Mr. Sriram Subramaniam, the founder and MD of InGovern, to shed some more light on this subject. So thanks for joining in. So, I was looking at the highlights of, the front page of that report, and it seems that you see merit, at least in some of the arguments that the Burmans are making, that there has been a lapse in corporate governance. And I think the heart of the controversy is the kind of remuneration, the kind of ESOPs that Ms. Rashmi Saluja is managing to sort of give herself, or the board has managed to approve towards her. What do you think of the issue at hand and the numbers that are involved, which could be, in excess of 400 crores?
Yeah, thank you for having me on the show. Firstly, the trigger for this was one of the journalists asked me a question as to what is the reason why there is pushback from the management. This happened, this is like a hostile takeover. And if you go back in 2019, it happened with Mindtree L&T. This seems to be similar. So there has to be some vested interest by the management, and it was not clear as to what is the reason why they are pushing back against the Burmans, because otherwise a strong shareholder coming and consolidating their shareholding and making an open offer is a natural thing to do. So we dig into the annual reports of Religare and also its material subsidiary, which is Care Health Insurance, and we figured out that the stock options which were issued to Rashmi Saluja, who is the executive chairperson of Religare, are very substantial. And now the value of those options, they are in excess of 480 crores. And if where you benchmarking Care to market this one like Star Health, etc., the valuations would be much, much more. And this has happened without actually making full disclosures, without making, I would say, getting IRDA approval, though the company contends that there is no need for IRDA approval. But the reason why IRDA approval is required is because IRDA tends to protect the interests of the policyholders of any private insurance company.
Okay, got that. Mr. Subramaniam, thanks for joining us. We were going through the report. Take us through some of the other, points which really stand out to you as major red flags. You've also mentioned that not just is it the remuneration that was offered in the ESOPs, the price also that the Care ESOPs were offered at was, and the fair value for this was mentioned at around 45. The shares, were later in the rights issue quoted at a price of 110, which is more than double. So take us through your findings on that front as well, and any other red flags which really stand out to you from going through all of the annual reports.
Yeah, so see, again, you dwell upon that correctly, that when shares is issued, it is issued at 110, the rights issue. And almost at the same time, there is a huge discount which is given, and it is given at an excise price of 45 rupees to Dr. Saluja. And this is like 2.2 crore number of shares. So from that perspective, two is IRDA approval was sought by the company, and IRDA specifically rejected the proposal. And IRDA also wrote back and mentioned that as a matter of policy, only up to 10 lakhs can be paid to non-executive directors. And subsequently, what happened is Care said that they are paying the ESOPs, they are issuing the ESOPs, not in her the role as a non-executive director, but in her role as an executive director of an employee of Religare. Oh, how is that possible? It is issuing to someone else. They have to issue ESOPs on what is her role in Care, right? So all these, I think, more from a disclosure perspective, more from informing shareholders of Religare properly and keeping them notified of their this one. For example, Religare shareholders were not even aware. It is not mentioned in the annual report clearly that 2.2 crore shares of CARE has been issued. So they are in the dark as far as they are concerned, because they have solved Religare shareholders' approval by saying that any compensation for employees will include ESOPs from subsidiaries. That's all. They have not specifically said 2.2 crores will be issued from CARE, which is a material subsidiary. The Religare owns 67% of CARE. So, and CARE was supposed to be coming out with the IPO at almost $2 billion market valuation. So from that perspective, it's a huge valuation. It's a huge, substantial this one, not just to shareholders of Religare, but also to the policyholders of CARE.
Okay, so let's take a step back, Mr. Subramaniam, and ask the question: what should Religare shareholders now track, and what should they do? Because I think they're in the midst of all of this, right? This tug of war. Yeah. There are all of these allegations against Ms. Rashmi Saluja and all the numbers that you described in terms of this, the non-disclosure of all of these ESOPs. That's on one hand. Then there is the Religare board, which in many cases, many of the directors were party to this letter that was sent by some of the independent directors saying that there is fraud perpetrated by the Burmans, and the open offer pricing is too low. They went to SEBI and said, okay, this should be investigated. I think SEBI then said that it needs more proof to come along with that letter. Now, in the midst of all this are Religare shareholders. What should be their recourse and their first steps in such a case, if indeed there are so many breaches of corporate governance as what you have said in your report?
No, I think, from what I understand of the SAST regulations, once an open offer is triggered, it's almost a procedural thing. Even SEBI cannot stop it. So from that perspective, the contention by independent directors that the open offer price is incorrect, etc., is not justified, because at the end of the day, that's a mechanical calculation which can be justified, which is just a NSE, BSE high-low kind of for the past 6 months, which is a mechanical calculation. So what is important is that the board actually takes a higher, the board of Religare, because at the end of the day, this is, again, the Burmans are putting up big money. One. Two, they already had a substantial shareholding in the company, and they are just the trigger has happened. Three is there is no other person in contention. In that sense, it is not like a bidding war happening out there. So if anything, there is only one large shareholder who is coming and making a bid for this. So to that extent, I am not sure as to what is the reason why the board of Religare is pushing back so strongly, and why they are contending that the open offer price is not correct. Because at the end of the day, that's a mechanical calculation.
No, fair enough. So okay, to come back to my question, can the open offer continue? I think the price at which it was launched was 235 rupees a share, and that's what we have as of last record. So are you saying that the open offer can continue and shareholders individually, independently can take a choice whether they want to back the Burmans or not? Is that the manner in which this will go? Because we spoke with the Burmans and they were very confident of getting all the regulatory approvals from SEBI, the Competition Commission of India, and other agencies.
No, at the very, obviously there is no compulsion on any of the minority shareholders to tender their shares. That is the process of any open offer, right? I mean, it's a mandatory open offer the moment any single shareholders, this one crosses 25%. So a mandatory threshold is triggered, and then it is up to the public shareholders to either tender or not tender. And if they feel that the price is not fair, they need not tender the shares in the open offer. They did not. They can continue to hold on their shares.
Now, do you foresee anything additional from the current Religare board that seems to be backing Ms. Saluja? Anything further in order to try and stall this entire process? What happens on those legalities in terms of what's going on the board tussle?
Yeah, that's what. As I said, I don't know the reasons why they are opposing in the first place. So one, and it seems unjustified that a open offer, which is a mandatory trigger after anybody buys 25%, is being stalled by a board that is sort of, it's not very clear as to what is the reason why they are stalling.
Okay. All right, Mr. Subramaniam, we will leave it there today on that note, but I'm sure the story will continue to sort of stir for a while, and we'll keep coming back to you as and when more developments take place. Thank you very much. We will take a quick break on that.